effectively your team has been bringing in AI applications to pave the way for what will be the future of an investment analyst role. And am I off? Am I off with that, or is that generally kind of the thought that the team had, just knowing the capabilities and kind of seeing a path towards the future where this entire role of an analyst is completely different?
Yeah, I think well, there's two parts to the question. I mean, I think there's the data science part, and then I think there's the investment research analyst part. And from and how we were actually using AI, during our time at Vulcan and during our time at Soro, we really found three big applications for it. One is idea generation. So just taking the things that you've loved in the past, ideas that were meaningful to you that you thought were going to earn a great return, and extrapolating the qualities or the elements that you found appealing there, and then looking for those across the broad universe of investment opportunities. So there's 70,000 publicly traded companies in the world, and no investment team, no research analyst has the time or ability to go and look at all of them, whereas a machine can in very short order. So that's incredibly helpful. It's like a stock screener on steroids. The second area where we used it, and now everybody thinks of this as just everyone's doing it, is helping consume that long tail of information on our particular business. So it can help me get up to speed very fast on an industry or a particular name. It can help me go through my research report when I've completed it and look, kind of against that corpus of information, trying to find omissions or errors or something that would disconfirm a thesis I've come up with. And then finally, the area where it's really useful is helping to mitigate human bias, which we've talked about a little bit here. But I think the way it actually transforms the research role is different. So we think there's kind of two elements to it. One, we touched on this a little bit before the podcast, but you go back in time 40, 45 years ago, there was no such thing as spreadsheets. Yet there were mutual funds, there were hedge funds, there were investment managers, and people did their work very differently without spreadsheets on a computer than they do today. I would definitely tell you modeling is more important now than it used to be, just because it wasn't something that people were capable of doing back then. I mean, you'd come up with your simplified price targets, et cetera, but you couldn't have them quite as granular as they are today. And I think when it comes to taking all of these different disparate pieces of information and kind of being able to update conclusions in real time or close to real time, the role is going to look much more not just about building models, but also building specific agents that can go and retrieve specific information, or agents that can monitor for specific information and then actually take action based on that. So go in, update your model, send alerts out to the team, or do whatever needs to happen. And I think those junior positions are not going to be about actually performing those roles as much as they're going to be about automating agents that can do that same thing. And then, your team, instead of being able to cover 20 stocks, is going to be able to cover 30 or 40 or, God forbid, 50, because you have all of these agents that are kind of working together. And so the role is, can you produce those agents, manage them, make sure they're functioning the way that they need to. And then secondarily, we actually think as time goes on and models become more commoditized. So, I mean, you think about Canalist today, where, they give you all these models, or Delupa, who's got all this information that's kind of being updated in real time. Building the model and updating it, it's already done. I mean, your goal is really, what are the assumptions that I want to put into the model? Like, okay, what's my discount rate? What's my growth rate? What do I think margin is going to be? Why? But it really is going to be freeing those senior analysts up to do more of the pound the pavement, get in front of the management team, get out there and actually find information via the Mosaic method or whatever else that other people don't have. The ability to somehow generate alpha by sitting at a desk reading 10Ks, it's just not there anymore. I mean, this is not 1965. And if everyone has this type of technology and can consume all this information and look for these dislocations, yes, I do believe there are some people who are just better, like Magnus Carlsen at chess. They may be able to arrive at a conclusion that you aren't, but the vast majority of money managers, or the vast majority of people in this space, it's not the case. I think it's really a change to, you're going to be more of an investigative journalist, or what role do you really have? How are you adding value relative to the machine? So either you're really good with machines, you can help build and create those systems, or you're going to move into this role of really trying to find idiosyncratic information that other people simply haven't done the work to gain access to. That's where we see the world going.